that's a refreshing, perspective to hear as well, especially now, with the economy changing, we have, supply chain issues, inflation, what all these other external factors coming into play. It can make people think that, hey, there's no deals out here, or hey, it's hard to get business, it's hard to build a business. So I think a lot of those thoughts can kind of be looming in someone's head. What would you tell someone who's looking to invest right now, maybe as we're in a recession where, it could get worse later on?
Yep, no, one of the strategies that we're leveraging, we're definitely being more judicious. We're being conservative with our numbers and underwriting. That we're looking back a couple years on where probably one great metric for us that we're tracking on my single family side, price per square foot. We're tracking where things were kind of early 2019, kind of going back, looking at numbers from that perspective when we're doing our underwriting, and just letting sellers know, hey, the market's shifting. This is what we're paying. We feel comfortable going back with having after repair values back at this level. And from there, it's just a matter of the numbers backing in on what we can pay. And so I think just having those conversations with sellers, but the same thing on the multifamily side, we're being real conservative. It's extremely hard right now with the lower loan to values that banks have out there for their loan products, because right now in a lot of markets that we have interest rates higher than cap rates. And it's just extremely hard to be able to raise money and then be able to get enough cash flow on the deals where you can pay investors a reasonable return. So I think right now that we're kind of playing a waiting game, that there's still some seller financing opportunities out here. My primary niche, we focus on deals 40 units and below, where we like to go direct to owner, where we can negotiate some great deals and work directly with owner operators, where we can come in and implement a value add business plan and kind of force equity, force appreciation, and and kind of buy for cash flow long term. And so if we're still able to do that, the numbers work at the higher rates, then it's perfect. But I think the biggest thing right now is that there's deals out here. You just got to find the right motivated seller that's willing to sell at the right price that cash flows at the current interest rates.
Absolutely. No. And there's a lot of great takeaways from, what you just said. And amongst that is, being more conservative with your numbers, right? Maybe, using procedures that you would have done in years past, kind of applying them to now and in the future. And of course, obviously, like you said, going direct to seller, it sounds like that's y'all's, more or less what you guys do, and really just analyzing the deal properly.
Yep, nope, 100%, 100%. And I think it's Warren Buffett that says when there's blood in the streets, it's the time to be buying. And when everybody's doing deals and everybody's all up, everybody's being successful and doing, real estate investing or buying stocks or day trading, that's the time to kind of take a step back and get ready for winter time like these that we're going through right now, where it's a little instability and everybody's kind of panicking and don't know what to do, and they're watching the news.
Absolutely. And aside from the conservative underwriting that maybe you guys do, is it, when you say it's a waiting game, is it more about just kind of sitting on the cash that you have for the next few months? Or, when you say waiting, what exactly are we waiting for?
Yeah, great question, because really just waiting for the changes in the economy and for some of the indicators, with I think the number one being the Fed funds rate. We're just kind of watching over the next couple Federal Reserve meetings to see where the federal fund rate goes. A couple people are projecting, that they're going to ease up since it's actually working. Inflation is kind of tapering back some; it's still high, but they're looking for the rate increases to probably taper off and stop here over the next couple of meetings. So I think once that happens, that we may see interest rates continue to go down. And once the interest rates continue to go down further, I think you'll see more, a little bit more activity pick up. And I think it's going to take a little bit more time for sellers to get realistic on their asking prices, that the market has shifted. And with the higher interest rates, that a lot of people are realizing that they can't sell for what they used to could sell for, 6 months ago or a year ago. And so I think just once we get back in equilibrium, where the sellers and buyers' expectations kind of get closer to one another, that I think you'll start seeing more transactions and properties changing hands. So, but until then, like you said, have your cash reserves, continue to hone in on your skill set with learning your market, doing the networking, meeting with brokers, talking with owners out there, and just letting them know where you are in the market, and and just get ready.
Sure. Well, that's a great take there. And it's interesting as well, kind of looking back and you think, wow, what really is normal, right? You think about 2019 going into 2020, obviously a lot of things changed with the economy, the supply chain over the past few years or so, and even now. So it can be maybe a bit daunting for someone to try to navigate, what's ahead of us.
Yep, no, 100%. I think that's where, especially if you're a younger investor or not as seasoned, you didn't live through the '08 crisis and things like that. It's the time to just align with different communities, with operators that have been there, done that, that have lived through different market cycles, and just being able to glean insight from them on what they're doing and what other people are doing. Whereas then you can kind of craft your own strategy based on your market and what's happening in your market, because real estate is local. We talk about a lot of things that's happening at the national level, but at the end of the day, it's at the local level what's happening in your neck of the woods in regards to unemployment, what's happening with new jobs coming into the area, and understanding, is there a lot of new construction, or the iBuyers in your market? Just understanding the intricate details of what's happening to the economy in the local area, so you can know how you need to proceed and how things are changing and evolving over time.
It's so interesting you say that, Johnny. I was just talking, with a friend, I think it was around last month or so, and we were talking about how, the future is local, right? So it's almost like there is that sort of need, not just in real estate, but just really in any aspect of business. It seems like people are wanting to do things locally and have that hands-on boots on the ground expertise locally.
Yep, no, that's where the wealth is made, with just having that intimate knowledge and being able to go deep in any one market, with just establishing the relationships, the systems, the management, and the teams there, whereas that allows you to just onboard new properties, and you're not just recreating the wheel in different areas and kind of spreading yourself thin across the board, unless you have a really a large team and an experienced team that you can do that. So I definitely agree that local is where it's at, especially now as things start changing with the economy like that. You want to niche down and you want to get really, really close to your income, and being able to laser focus in on the areas where you can just drive some efficiencies and continue to be profitable.